Welcome, everyone, and thank you for attending the third installment of our Corona Correction webcast series, Corporate Supply Chain, Managing Disruption and Risk in the Global Markets. Are you prepared? My name is Karen Ashley, and I'm the Head of Marketing for the Americas at Refinitiv. Before we begin, I'd like to cover a few housekeeping items. First, some technical points to note. There's no dial-in number for audio, so please use your device sound and plug in your headphones to listen to the webinar. Click the media player on your screen to enable sound. Ensure that Flash is enabled on your browser. If the slides are stuck, please refresh your browser. At the bottom of your audience console screen, you'll see a toolbar with multiple widgets you can use. If you have any technical difficulties during the webcast, please click on the Help widget. It's a yellow question mark icon. You can expand your slide window by clicking on the Maximize icon on the top right of the window or by dragging the bottom right corner of the slide area to expand. At the top right corner of your audience console is a Q&A box. Please submit your questions in this box. Our presenter will try to answer as many questions as he can during the last 5 to 10 minutes of the webcast. But if a fuller answer is needed or we run out of time, it'll be answered later via email. You can register for part 4 of the Corona Correction webinar series from the window box in the bottom left corner of the audience console. And finally, the link to the recorded webcast, a copy of the slides, and other resources will be emailed to you after the conclusion of the event. You may also access the webcast on demand using the same audience link that you used to get into the webcast today. So, I'd like to introduce today our speaker, Julian Morris. Julian leverages a decade of experience in the financial technology industry to deliver value-added efficiencies to Refinitiv's clients. He focuses on the modern delivery methods and usage capability of Refinitiv solutions to assist our clients. So without further ado, I'll turn it over to Julian to get started. Julian?
Great, thank you, Karen, and welcome everybody. So what I'll be taking you through today, I'll start off with going through the macro impact of COVID-19 and tools available for analysis of national economies. Then we're going to spend the bulk of the session really looking at the tools available for stock level analysis, so single security research. I'll then focus a little bit on how you can monitor the same kind of information at the portfolio or watch list level and monitoring tools that are available within our desktop solutions. And there will be the occasional polling question, so I do ask everyone to pay attention to those. So my first topic here, we're going to start with a little bit of the top-down analysis. Some of this was covered in some earlier webinars or different webinar series that we have. There are recordings and resources available on demand for that. I would just like to kick off by mentioning Refinitiv has a partnership with Fathom Consulting. They have devised a number of pre-built charts, provide exclusive research, and they combine these kind of visuals with our Datastream content sets. So this, for example, is one of the Macro Vitals app available within Eikon. And this covers all the COVID-19 macro impact details, comes with these pre-built charts that I've mentioned, and leverages really the Datastream content. So within Datastream itself, you can be looking at over 500 million different time series available across economies, across continents. The history and scope of Datastream is pretty impressive and generally speaks for itself. But the ability to actually put this into usable charts with insights, as you can see from snippets at the bottom of the screen here, describing what we're actually looking at, is where Refinitiv really comes and provides some usable intelligence for our clients. Now, there are quite a few macroeconomic tools available within our desktop Eikon, and one of those tools, which will focus a little bit more on the relationships between national economies here, and provide the end user with presentation-ready materials, is our Macro Explorer. So there are actually multiple views and different ways to visualize the data and have this playing in the background, for instance. But I'm actually focusing right now on the Macro Explorer, the Global Connections tab here, and looking at who the top trading partners are of my home economy, which I've selected here to be the United States. I think there should be no surprise. We have the list of top trading partners on the right-hand side. But this is a starting point. We'd want to start comparing these trading partners with our hardest hit countries by the COVID crisis. Now, some of the Datastream content that I referred to earlier, so if I want to delve into China as an example, some of that Datastream content is visible here in this sample that I've taken. This is a quick screenshot from our Datastream Explorer view. This is set currently to a generic search on China, and I've selected one of the results here. You will have access to over some 300 million time series on China alone. This collection set was actually recently expanded towards the middle or end of last year. There is significant coverage and history available. Now, this is integrated within Eikon or available within the Excel add-in. A lot of this content is typically exported to Excel for further manipulation. But within the Explorer itself, you'll be able to search by using some of the pre-canned filters, do natural language search, and any result that I select, such as here, for instance, Industrial Production Index, you'll be able to get a snippet sample of what the content will look like, what the source is, how far the history goes back, any related series that might be of interest to you as well. Now, as I mentioned, the bulk of this series is to focus on analyzing supply chain risk at the stock and portfolio level. So for this section here, in terms of single stock analysis, I'll be focusing on leveraging Reuters News, how we can look at a company's foreign subsidiaries, where those subsidiaries lie, but then more importantly, looking at our companies or our stocks, suppliers, customers, who they are, how reliable that data can be, and then actually leveraging a number of the quantitative and fundamental-based models generated by our Starmine research team to really look into answering the question, how safe is your stock? How safe is your investment from the COVID crisis? If I pick pretty standardized example of using Apple as a stock that I want to start running an analysis on, I'm going to start off by running a quick Reuters News search. Now, obviously, Reuters News is exclusive to Refinitiv and delivered by our feeds and our Eikon desktop platform. There are over 10,000 items, around 10,000 items delivered every day in the form of alerts, exclusives, videos, newsletters. So this example, I'm using Apple, running a quick search using so filtering specifically to Reuters News as a source, and I can actually, quickly highlight relevant. I can see quickly see relevant news articles. Anything that pops up in red, for instance, is going to be a headline. So if I see these headlines pop out throughout the day, I know that this is potentially market-moving news with a full article to follow. But as an Eikon desktop user or a Refinitiv Feeds subscriber, I'll be first in the market to see this news. I'm actually selecting an example article here. Let's take a look at what we can actually get from the way Reuters News articles are formatted. But first of all, this example is highlighting major drop in iPhone shipping in February, but with an uptick in March. Now, this is a couple days old at the time these slides were put together. But what I want to point out here is this article, not a full article, it's actually a bullet-pointed summary. There is a link to the full article toward the end. But I can very quickly see, from a glimpse of, with a quick glance, highlighted in blue, any associated RICs, which are Refinitiv identifier codes or tickers, associated with the article. So obviously we have Apple at top, but then lower down I can actually see a reference to Xiaomi Corp listed in Hong Kong. One of the Chinese suppliers. We're actually going to see a little bit more from them as we go along. Now, using these news articles, this gives me a little bit of context, a little basis to form my research on. So I'm actually then going to go back to our source stock, Apple. This is the landing overview page that you'll find within Eikon. Navigation is pretty simple to use, very browser-like. And one of the first stops I'm going to make along the way is I'm going to take a first look at Apple's company tree, which I can actually quickly access by this tree icon located at the top of the screen. One of the first things I'm actually going to do when I open up that company tree is I'm going to start filtering specifically to see subsidiaries listed or incorporated in the geographies that are hardest hit by the crisis. So I filtered it down to 5 or 6 of the top hit countries in Europe and Asia. I think there should be no surprises here. We have quite a few subsidiaries based in China. Now, all of this, none of this should come as any surprise to any of you when it comes to macro analysis, the types of insights you can pull from Reuters News, and then looking at Apple's company tree structure. But this does provide me some useful background. This has provided me some useful background for and context for the internal geographic exposure. But one of the key questions and the harder ones to answer are what about its external relationships? Now, for that, I'd like to introduce you to the value chains app within Eikon. This is found under the peers and valuation menu, and when I pull this up, once again, I'm not looking at a full list here of suppliers and customers. I've actually drilled it down to a couple countries. I think I've actually only selected China in this example. But what this is going to give me here is a list of a company's suppliers and customers with a confidence score. This confidence score relates to how confident and reliable we are, how confident we are that the underlying data is reliable. The number of snippets, which you might see by one of the columns to the right-hand side, is actually going to allow you to view how we have justified the fact that one of these companies here is actually a supplier. So if I take the first one in the list, for instance, AAC Technologies, we have over 30 snippets. This is going to be references to company financial accounts where this supplier might be listed, articles, interviews by execs. So you have full data transparency and understanding where we source our information from. Now, included on the screen is something called you have the EQ score, which is earnings quality. I'll come back to that. The implied rating, I'll come back to that as well. Both of those are actually going to be central to the rest of the session. But this screen does have different views. A lot of this is exportable for further analysis off of the terminal as well. Now, if I continue with this case study as an example, I'm going to take AAC Technologies and I'll have it loaded in very much the same way that I loaded Apple stock to begin with. And again, I'm just going to do a quick news search. I can already see some cause for concern and further research needed on one of Apple's top suppliers. One thing I'm going to start off by doing is actually creating an alert on the list of suppliers. So I've actually exported the list of suppliers from the value chain. application, saved it as a with a custom title called Apple Supplier. It's gone into my alert manager, and then actually starting to create a saved custom alert that I can receive in different formats, whether it's emails, sound alerts. I think I've chosen the pop-up method here. So I'm looking for any news. I want to be made aware of any news articles coming out on any of the suppliers in that list, including the keywords COVID or coronavirus. So this is a very simplistic alert, of course, but just to show you how customizable this is. Now, all this has been so far relatively high level, pretty straightforward. So I would actually like to start with one of our first polling questions. And in terms of your first stop for analyzing credit risk within one of the stocks within your portfolio, are you more likely to rely on financial reports, stock news, or broker research? I'll pause for 30 seconds to allow the attendees to answer, and then we'll look at the results. All right, a few more seconds, and we can see what we have. All right, I don't think any of this is too much of a surprise to anybody here. We're actually going to take this forms the basis for why using some of the models we're going to take a look at can be a significant value add. Starmine models. I'm not sure how familiar you might be with the Starmine brand. Starmine models are exclusive to Refinitiv. You can categorize them in generally two groupings. You have more alpha-related models or credit-related models. There are Starmine analytics. I'll talk a little bit about the differences between these. But one of the major challenges to using financial reports, which is, again, no surprise, it's the first stop for analysis of credit risk, is the lack of real-time data availability. Financial reports are going to be quarterly, annual, typically backwards looking. Yes, you can incorporate news. Yes, you can incorporate broker research. But a lot of the time, the financial ratios that are typically used for credit analysis are going to be backwards looking. So I'm actually going to focus on only two of the Starmine models. There are quite a few that I could spend a lot of time talking about, but I'll pick two that I think are most relevant in this case study example, namely the text mining credit model and the earnings quality. So I've already mentioned the EQ score from the value chains previously. Again, we'll come back to that. Now, white papers are available for any of these models. If you want to delve into them a little further, I'll touch upon how you can find that kind of information. Just a little bit of context around the text mining credit risk model. It is actually one of three credit models that fall into what Starmine terms the combined credit risk model. Now, this is going to give an implied credit rating and an estimated probability of default for any given stock or debt issuer, and it's generally ranked against a company's peers. So the text mining credit model is one of three inputs. As you can see on the screenshot to the right, we have three models that fall in within combined credit risk: structural, smart ratios, and text mining. I will focus more on text mining, but just for a little bit of context, the structural credit risk model, it typically evaluates the equity market's view of credit risk. But Starmine uses a proprietary extension of the structural default prediction framework introduced by Robert Merton that models a company's equity as a call option on its assets. I won't be focusing on this model in very much detail on the session, but as I mentioned, there are white papers available. The smart ratios model will use your typical accounting ratios, but it does provide daily updated estimates of default probability. Now here, I can actually see this is the combined credit risk model run on AAC technologies. I can see its implied credit rating of A, slightly higher than Moody's current credit rating. But what's interesting is not necessarily the implied rating itself, but actually the delta in that rating. So a typical credit rating agency might not reassess the credit rating of a particular issuer for some time. Quite frequently, even large blue chips, we don't see a credit rating shift in 2 to 5 years. This output, this implied credit rating, will change as frequently as the underlying models make it necessary. The actual credit rating of A in and of itself is not going to be the most useful, but what it will provide, if I'm looking at the history, the delta and the change in this implied credit rating has been proven to be highly successful in acting as a precursor to an actual credit event, be it a credit rating upgrade, downgrade, or placement of a particular issuer on a watch list or positive and negative outlook by an actual credit rating agency. Now, as I mentioned, one of the challenges using financial reports is the fact that they are primarily backwards looking. The text mining credit risk model attempts to address that, and it's very interesting in how it does so. Essentially, it uses it evaluates the language in a number of source documents, including Reuters News, conference call transcripts, corporate filings, broker research, and the white papers are there with to provide context into how accurate these models have been in the past. And as you can see from our statement here, it has accurately predicted 82% of default events within a 12-month horizon. So this adds an important real-time view of credit risk in a way that can complement your current analysis in a way that other models simply don't. If I jump back to the screen that I had open earlier, this is actually launched from Eikon itself, from the Starmine models, and I've picked the text mining credit risk model. Just want to highlight, this gives you a definition. This does provide explanation into how the model works. But from here, you can see white paper, explanation video, frequently asked questions are readily available. Now, let's actually use this model, the text mining credit risk model, on an Apple supplier. Let's stick with the one that we've selected so far, AAC Technologies. Again, navigation of Eikon is pretty straightforward. I don't have to memorize any shortcuts or codes. I can simply go to the credit menu, select text mining credit risk. You do have shortcuts actually in the quote line. You'll see CAM 40 and CCR 84. Those are quick links to the alpha models and the credit risk model. So just to highlight that those quick links are there. Now, actually running the text mining credit risk model on AAC Technologies, what are we looking at? So I can see here it's actually generated an overall score of 86. So this implies that AAC Tech versus its peers is actually in the top 14%, but top 14% of what? So as I mentioned, text mining will analyze transcripts, filings, news, research for a bag of words that essentially looks to predict likelihood of financial duress. Now, each of these, you'll see these words are further classified into 4 categories relating to income, structural, legal, or external categories. So what do I mean by that? As an example, if I look at the structural category, so this category uses language about the company's balance sheet and debt structure. So for example, the following words would lead to a lower score. A need to obtain additional financing. On the other hand, the following quote, if detected in any of the source documents, would lead to a higher score. Starting a share repurchase program. I can actually see to the right-hand side what are some of the most recent. I think I filtered this to news, and you can see when, as of this screenshot was taken on the 16th, and over the last couple of days, a couple of news articles have already been fed into the model, including a mention of mandates to repurchase shares, etc. So what all of this is actually contributing is to a fairly positive overall real-time analysis of credit risk for one of the major suppliers of Apple. Now, you will want to combine these models, with some of the other credit models, but what are particularly powerful as well are some of the alpha models, namely the earnings quality that I've already mentioned. And I can run that on the supplier or on our underlying stock itself. I think here, this is just to give you a quick understanding of what we will be looking at. So again, I'm on the Starmine overview page within Eikon, and now you can actually see a drop down of Starmine models. You can see how many there are. Focusing on earnings quality, just to give you an understanding what this is, it's not a measure of how profitable a company is. This is really going to be a measure of how sustainable and reliable a company's earnings are and their likelihood to persist in the future. And there are three main pillars that will go into that analysis: accruals, cash flow, and operating efficiency. Again, I could spend quite a little bit of time here talking about each. I prefer to focus a lot on the cash flow component of the earnings quality model. Accruals are a little bit more subjective and therefore subject to a little bit more manipulation. Cash flow, more of a reliable input to analyze. So if I run this model, this time on Apple itself rather than its supplier, I want to understand how reliable and sustainable Apple's earnings are. So this is a deep dive, more of a drill down into the earnings quality model for Apple, and I can clearly see the three sections on the left-hand side for Apple compared versus the industry median and the model benchmark, and I can tell which underlying metrics will have a positive or negative effect on the overall score. The overall score coming out in the 96th percentile. Every green item that you see, such as PP&E, will have a positive score, a positive effect on the overall score. If there's a negative, and if there's a negative effect, such as pertaining from accounts receivable in this case, you can see that that is bringing down the score a little bit. However, I can see in terms of cash flow itself, Apple is in the top 1% versus its peers with a healthy 99 score. And on the right-hand side, I can actually see how this has evolved historically with each earnings release. So what this is telling me is the cash flow situation within Apple, while already good to begin with, of course, still has been improving gradually over the last 18 months. This is a fairly strong position, but also remember these scores are relevant to a company's industry, country, and region. So we do make sure that the comparison, the peers that this model is being run against, and the model and that are included in the model benchmark, are relevant for the stock that we are running. Now, all of this is handy in analyzing a particular stock's earnings reliability or the creditworthiness of a particular supplier. But what tools do we have to actually run this on a portfolio level Or if I've created a watch list, how can I view these model scores on multiple stocks at once? I don't want to have to run them one by one. So I'd actually like to introduce you to our portfolio analytics application. Now, this is by far and large my favorite part of the Eikon terminal. There is so much customization available here, and I've tried to illustrate some of it with this sample. So this is just a very basic long equity portfolio. I think it's primarily the Dow Jones holdings. But what I've done here is, rather than choose one of our pre-existing templates, of which you have almost 40 or so, and by templates I mean ready-made portfolio reports. So actually, once uploaded, I can create and pick from these presentation-ready reports. But the flexibility and customization available here allows me to easily highlight holdings or sectors with particularly weak metrics or Starmine scores as an example. And I can do that by creating a table, as you have on the left-hand side, and then simply sorting by earnings quality score. Or I can have more graphical visualizations, which I'm a personal fan of, and creating widgets such as scatter plots, where I can determine what goes on the x-axis, the y-axis, and the size of the bubble. In this case, we're looking at the x-axis representing the text mining score for the sector, and the y-axis representing the earnings quality score, and the size of the bubble being the weight within my portfolio. So I can actually pinpoint right here, my capital markets have, the holdings I have within capital markets actually have the lowest sustainable or reliable earnings across all sectors in my portfolio. But worse, I'm actually combining that with relatively negative sentiment coming from the text mining model itself. So this is a potential area that I want to focus on. And then I can actually create, different ways of viewing this versus the benchmark. If I'm simply tracking a benchmark and I want to make sure I'm matching the benchmark's risk, I can have overall, it doesn't have to be stock level or sector level scores as we have in the table to the left or the scatter plot to the right, but I can have portfolio level scores for each of these metrics as well, and then view the difference therein versus the benchmark. And I've handpicked a couple other Starmine model scores and analytics there to display. But again, these are this is the portfolio analytics app. As you can see, the analytics tab is selected on the top left section. If I want to do a bit more of a deep dive, and these might not be so presentation ready templates, but more useful for a portfolio manager or a portfolio or a PMA. These reports, again, now I'm on the reports tab, which you can see selected in orange on the top left section. This is just using our Starmine report template. Here I can quickly see, aerospace and capital markets have significantly weaker score, a lot more sustainable to supply chain disruption. These reports are exportable. The section was a little cut off on the previous shot, but what you see on the right-hand side is different ways to lay out the content, but export options to both Excel and PDF. So what this actually means is I can go in and I can customize individual widgets within these tables or scatter plots or charts. I can actually go in and pick what metrics I want to use, whether they're Starmine and score models or simply your the accounting ratios that you're used to using from our earlier poll question, actually. So the portfolio analytics is highly customizable, from everything to the layouts, the color schemes, but the actual content of what you're viewing, and making it obviously exportable for use off of the terminal. Now, analyzing the single stocks, running all this within portfolio analytics is useful, but we do have, let's say, less intensive tools readily available. This is a quick sample of a simple workspace layout within Eikon, where again I've exported that list from the value chains saved it, saved the top suppliers, named them Apple suppliers in a monitor. I've connected a news monitor to the right-hand side to that watch list, and filtered the news only to news of stocks within the monitor to the left-hand side. And again, on the monitor, I can customize those columns. So you can see here that I'm monitoring in real time the earnings quality and text mining scores. Now, we do have a second polling question, and this relates more to how do you monitor the credit events within your watch list or portfolio. I will leave this open for 20 seconds, and we can look at the reports, the results then. All right, a couple more seconds. There we go. Let's see how we fare. Yeah, I think there's, again, no surprise, setting alerts. I've already touched upon it a little bit. By far and large, the most popular method. I have a watch list, I have a portfolio. I want to set alerts on whether it's news articles with the COVID-19 or coronavirus keywords. I want to be alerted to a credit rating change. I want to be alerted to a new recommendation or a significant price movement. One of the major challenges that our clients face with these is essentially getting lost in the noise. For that, I'd like to introduce you to our Watchlist Pulse. Watchlist Pulse, extremely useful in that, first of all, I can set a source list or portfolio. In top left corner, I've actually set that to the list of Apple suppliers. And then I can customize the columns. Here I've customized it to show me earnings quality, the TMCR, which is a text mining credit risk score for the list of suppliers in that list. But more importantly, I'm actually sorting the stocks by the very first column, which is activity. So I want to see most activity first. And the one at the top is actually the one that was mentioned in the article at the very beginning of the presentation, Eikon, listed in Hong Kong. Now I'm sorting by most activity first, and I've opened a couple of the stocks to see what kind of activity we're talking about here. And it's going to be everything from, I can see for Akamai, the Starmine price momentum score has increased. So there's underlying movement and positively as well. So there's movement on that stock. But I can see for the stocks, these suppliers below, we have negative changes when it comes to analyst coverage and recommendations, estimates. If there are news sentiment on the suppliers, if there are earnings calls, stockholder conferences I want to be alerted to, it will actually all be neatly grouped into this one single window for me. I'm not going to be bombarded by pop-ups or emails. I'm not going to miss this by using an end-of-day wrap either. This just allows you to keep in one single screen for a source, whether it's a watch list or a portfolio, a nice and easy way to monitor fundamentals and Starmine scores whilst being able to catch your news alerts in real time. Now, I realize there are a lot of other aspects to take into consideration when it comes to supply chain disruption for stocks in your portfolio. I know some of these have been fed back as areas you'd like to understand a little bit more on. This can be everything from compliance issues to disruption in the commodity supply chain, the shipping lines. We do have online, there are a number of case studies that have already been put together that address almost each and every one of these topics. I'd like, if you do have the time, I'd encourage you to visit the link that I have at the bottom here. These are also available within Eikon itself. So I'm actually if I go back to that Starmine screen where I had a list of models, analytics, etc., I can see the final option is Lipper Alpha Insight. And using, there are some more, some case studies and what's the word I'm looking for? Let's say real-time insights published on there using the Starmine content, not only giving you model scores, but actually trying to provide some idea generation assistance here. So we have, using some of the Starmine methodologies, I can see a number of companies that I might want to stay away from, as well as some companies that I might want to jump into before their earnings come out. And this is that we're expecting earning beats using some of the Starmine analytics, namely the predicted surprise. So there's a significant amount of content. I've touched loosely on a number of different areas. Your customer support team, as well as your account management team, are readily available to organize one-on-one or group training sessions, or more in-depth sessions on any one of these topics if needed. And with that, I suppose I would like to hand it over to our Q&A time. Thank you very much.
Okay, great. Thank you, Julian, for that. That was chock full of information. And I'd like to just go to some of the questions that we have, just a few quick questions. One, if you could go back to the company, where did you show the company subsidiaries, like immediately prior to the value chain? And I was following your slides. I think that may have been around slide 12. Can you just kind of show how you get to that information?
Yep, so this is the screen you're referring to. This is the company tree structure. So I think on the previous slide, here we go. So within Eikon itself, all I have to do is type in the name of a company. Here it's Apple. You can see it typed into the search bar in the very top left corner. Now, most of the applications or apps within Eikon will be grouped into these menu items that you see along the top of the screen. Company tree structure is actually a little easier. There is a shortcut simply by clicking on that tree logo or icon within the red rectangle. So that's how I would access it. Now, what we're actually looking at here is not the full tree structure. That would be a little complex to show in this format. I also switched it from list view to tree view, and I've only filtered down using the filters on the left-hand side to some of the hardest hit countries in terms of COVID cases.
Okay. During the presentation, you referred a lot to some Starmine models, and you talked about Starmine's predicted surprise. What does the surprise, what does that mean?
Yes, thanks. I think I've mentioned that a couple of times. We see it within the portfolio analytics. It actually also forms the basis of what I finished on regarding upcoming companies that are expected to miss or beat estimates. If I go back to the portfolio analytics screen, you'll actually see it as the bottom line item in the table to the right-hand side. This is predicted surprise for first quarter earnings. So predicted surprise is derived from one of the Starmine metrics. It's not a model, it's so much. For instance, a lot of analysts will typically use the mean estimate for earnings per share on a given company. What Starmine attempts to do is actually look at the track record of each analyst covering a stock in the past, seeing how reliable and effective they were on that stock for that metric, and giving the more accurate sell-side analyst a higher weight. So if that trend continues, your smart estimate, which is the output, will differ slightly to the mean estimate and should be tilted towards those analysts who have been more accurate in the past. The difference between the two will be your predicted surprise, positive or negative.
And is there a way to see the year-to-date performance of Starmine models?
Actually, there are a couple of things that you can do. Let me see if how this is visible. So if in Eikon, if you search the word Starmine, you'll see this app, Starmine Overview. I've pulled it up a couple of times, mainly to show you the definition of the models. So I don't have a screenshot there for the section that you want, but if you see the very top left, the first selection is model performance. That'll allow you to choose a region and a time frame. I think we have 2 time frames available, 1 month and 12 months, and you can see the performance of the quartiles of the performance within those models. There are, again, additional FAQs, white papers, and specialists that you can speak to for each model.
Okay. I'd like to switch to the Eikon portfolio analytics, and I know that we have MSCI analytics within Eikon. Can you talk a little bit about scenario or stress testing, or doing some simulated historical scenarios on portfolios?
Absolutely. So yes, you're correct in that what Eikon portfolio analytics has is a partnership with MSCI's risk metrics. So amongst the templates that can be chosen, so some of the simple templates will be, a summary of my equity or fixed income holdings, a breakdown of performance, attribution. But some of the templates available are from MSCI risk metrics, and that will cover everything from the being able to run historical scenarios, such as Black Monday, 9/11 on my portfolio to see the effects, as well as creating my own custom scenarios that I might want to shock the underlying U.S. yield curve, or to view the effect on my portfolio of a 10% drop in the euro currency. You will be able to actually pick and choose, customize the scenarios, and run those and view the effects in your portfolio. Additionally, value at risk analysis available through the same partnership with MSCI, with historical, parametric, and Monte Carlo methodologies available too.
Okay, great. I have one more question. Mitigate risk and shift towards higher quality stocks with regard to earnings. Are there Starmine scores only available once I select the stock, or how do you navigate to the right thing?
Sure. So if I take one quick example, looking for the correct shot here. So this, for instance, is, yes, this is the only view that I've presented right here is once you pick the stock and then run, access one of the models, or in this case, text mining, or in this case, earnings quality for Apple. These are one by one. However, I can go, so first I do have within Portfolio Analytics the ability to view Starmine scores across my holdings or within the monitor for a watch list, but I can actually launch our screener app and search, for example, I want to see all North American listed stocks that have an earnings quality score of 75 and greater, and it will filter to that list. You can save that list to jump back to it in a couple days' time, and the list will be updated with any stocks that have dropped out or been added in since that now meet the criteria. So all of this, 100% of the data that I've shown you here, you can use within our screener tools as well. Okay, great.
So we're nearing the top of the hour, and that's all we have time for. I would like to thank Julian for a great presentation. And before we conclude, we value your input and would appreciate it if you would take a few moments before you leave and answer the survey that appears in the bottom right corner of your audience console. And again, thank you to Julian Morris, and thank you for your time today. As mentioned at the start of the broadcast, you will be receiving an email with a link to the recorded webcast, a copy of the slides and resources, and an invitation to the next event. We're also running a webinar with MSCI going deep into some scenario stress testing, portfolio optimization that's on May 7th. So I can send anyone who's interested a link to register for that webcast. Thanks for your time today and have a great day. Stay safe.